Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Qs, which is basically the ETF for the tech sector. And last week what I did, I'll expand it here for you so you can see. Last week I extended my upward trend here, saying that the NASDAQ would most likely rally higher and then towards the end of the week pull back. And again, if you're following along each and every week with these reports, you'll know how accurate they really are. And it's pretty amazing because technical analysis is, in my opinion, the greatest tool that you can use for forecasting. And we also use it as a risk management tool as well. So last week I put this out, and then I extended the forecast into this week, and I said that we would pull back. And look at that. Yesterday, which was the 20th of September, the high on Thursday right here hit my mark precisely. And then today, lo and behold, on Friday the 21st, we have a bearish engulfing pattern. So what does that mean for next week? Well, if you look down here, there is a support level from the lows back on September 7th. And so we're going to use that as a support level, and I believe that next week the NASDAQ is going to pull back right to that support level, so I'm going to extend this out in my forecast. So that's how it looks right now and how it's shaping up for next week. Now, on a more broad-based index with the Russell 2000, I did say that we would move up, and we did that. However, we didn't hit the target right away. And I think what's going to happen is, I'm just going to move this over. I think that target ultimately will be hit, but I think it's going to move against the NASDAQ. In fact, I think the Russell 2000 is going to move up just like that, and then towards the end of the week it'll most likely pull back. So I'm going to leave that little hash mark right there as an indication of when we expect to pull back. Now on the diamonds, which is the Dow Jones Industrial Average ETF, this went up, like I said, early in the week, but it kept going up. And that's not necessarily a bad thing, because when I put out these alerts, I tell people to trail your stop up. If you have any long positions and you think the market's eventually going to pull back, what you do is you put your stops below support, and then as the market goes higher, you trail those stops up to protect any profits. So I'm going to erase this line, and for next week I believe the diamonds are going to pull back just like that to fill this gap. It might even pull back a little bit more than what I've suggested here, but the end of this line is my target. We have a gap down here 90% of the time in the Dow, 80% for the rest of the markets, but 90% of the time in the Dow, the gaps fill. And if you look down here, the stochastics oscillator, which is the K line, the blue line right here, that's showing an overbought condition. I'm even going to forecast this to be lower early in the week, and so I think the K line is going to start to drop down, and then once it crosses this red line, it will be a sell signal. So the technical traders will start unloading their positions once the stochastics crosses down there. So again, my forecast for next week on the diamonds is lower prices. Now if we look at the spiders, this is the S&P 500 ETF. Market moved up exactly like I said it would. It, for a brief moment, hit my resistance and then pulled back. You see right here, let me zoom in a little bit more. And then it broke out through this resistance. You see that? So what I'm going to do for next week is erase this line, because I think we're going to immediately break through that new support level. And just like that, I think the spiders are going to pull back. Why do I feel so strongly about that? Because again, look at the stochastics. You have the pivot point here. It's starting to move lower from an overbought condition. It's starting to move lower, and eventually this will give us a sell signal down here. So the SPY, again, is the S&P 500 ETF, and you can see today, as I record this on the 21st of September, the volume has increased, which tells us the sellers are starting to move into the market. Now finally, let's look at the VIX. The VIX is a leading indicator. I said we would most likely drop on the VIX early on. We did that, right to support level right here, and now we're starting to show more bullish signs for the VIX, which again, because this is inversely related, a bullish sign on the VIX is bearish for the S&P. So I'm just going to move this line over right here. That's all I'm going to do. But I think that the VIX is going to get a little bit more aggressive next week and start to rally, which again in turn is bearish for the overall markets. Look at that stochastics. It plays the same way on the VIX as it does any stock. The VIX is now showing oversold. Below 20 on the stochastics is oversold, and I think the stochastics is going to start to move up, again giving more fuel to the upside on the VIX, which is, again, I'll repeat this over and over, bearish for the markets next week. Now, speaking of next week, on Monday the 24th, we're having an open house Q&A session. If you go to themarketguys.com and scroll down just a little bit, it has a register now button right there. If you click on that, it will bring you to the registration page for next Monday's event. This is a 1-hour action-packed session where I take your stock symbols, I analyze them, and I even answer your questions. So if you have a question about a stock or a position, as long as we're doing this in the open, in front of a large group, in public, it works out very well for everyone, because there's a lot of folks that just kind of hang on the sidelines and more or less a fly on the wall to get some ideas on what to look at in the market. And even if you just plug in and listen only without typing in a question or a stock symbol, I guarantee you, you're going to get something from it. So that's our weekly market report for this week. Have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.